This is Dan Dix here reporting for Press for Truth. I'm glad to have you joining us here today, folks, because we got a great show lined up for you. So let's just jump right into it. Joining us on the line right now is Keith Neumeyer of First Mining Gold, firstmininggold.com. Keith, thank you so much for taking some time to speak with us, especially in these troubling times. We're seeing mounting tensions right now between the U.S. and Syria. And, you know, Donald Trump's got his eyes set on going in there under the guise of a humanitarian mission. And it looks like Russia is threatening blowback if anything happens. So, you know, to my surprise, gold and silver have been kind of trading relatively flat in response to this. So I'm curious, how effective would you say is gold as a hedge in these troubling times?
Well, I don't think there's a reason to be buying gold, quite frankly. I buy gold for completely different reasons. Governments are unreliable. Governments have proven that they're unreliable for decades now. They're spending money frivolously. They're indebting our nations without really no valid reasoning, as far as I'm concerned. They're not focused on their own regions or their own people. A lot of the governments are focused on other countries and frivolously spending money trying to manage other nations, when I think they should be focused on infrastructure projects and educating children and eliminating poverty. These types of things should be the real focus of our government. They want us to be spending billions and billions of dollars on things that are not in your or my best interests. The world today is more unstable than probably in our lifetimes, which is pretty shocking. I wouldn't have predicted that, but it's not the reason I buy gold. Gold. I think that from the government's perspective, they're probably trying to keep the markets buoyant, and they're probably trying to keep the metals down because they don't want to alarm the normal person on the street that in fact there is something going wrong, because people relate to this high stock market, and God forbid if gold was $2,000, people actually might start losing faith in the government. So we can't have that happen. But it's just the amount of money that's being printed on a global scale. That's really the reason why you need to be buying gold. Gold is the ultimate currency, and it's always been that way. And, we are, in my view, going to go through some major reset whereby we will start using gold again.
Yeah, I agree. And there's also, not to mention the issues with China. I mean, there's the impending war in the Middle East, but there's also this potential trade war looming between the U.S. and China. So should that kick off and erupt, how do you think something like that would affect the gold and silver markets?
Well, it's kind of new territory, and then we haven't seen really any major trade wars since the 70s, and I was a little bit too young back then, and I know that obviously gold went up to $800 from $25 over a pretty short period of time in the late 70s, and maybe we'll see a similar type of move this time around due to the stability that we seem to be losing in trade on a global scale. But I don't have a crystal ball, so it's just really, really shocking, quite honestly, that the governments are going down this path, quite frankly.
Yeah, and in terms of First Gold Mining, the shares 3 years ago were around, I believe, 40 cents, and today they're trading relatively for the same amount. So what would you say has changed in terms of value?
Well, the mining sector, when I put First Mining Gold together, it was in 2015, and we were buying assets quite aggressively. And you're right, the stock was in the 25-cent range, 30-cent range. I think it, spent a lot of time in the 50, 60-cent range as well. Then 2016 came along, and we had a nice, beautiful run on silver and gold prices, which buoyed the entire mining sector. First Majestic went out 500% during a very quick, short period of time in early 2016, and First Mining Gold hit $1.30, I think was the high. And since then, the love has more or less fallen out of the sector. That was the institutional money coming in and driving this market, and that goes to show you how small this market actually is. When the institutions decide to start coming in for whatever reason that may be, it can really light up this sector. They're obviously not in this sector right now. I spend a lot of time in discussions with institutions. I travel around the world, meeting them and going to conferences and so on. I know that the institutions are very, very underweighted in this sector. It's paid them a lot to chase the FANGs and chase the S&P, and they've done very well on that trade. And you can't blame them. If they keep making money buying Apple, then why go buy a mining stock? But things do change, and we earlier in my career during the beginning of the previous bull market was 2000 2002, where we saw the Nasdaq crash, and all of a sudden by 2002 the money started coming into the mining sector. It started off slow, but it was the beginning of a 10-year bull run in the mining sector, which was pretty exciting. And that's when I put First Majestic together, and I think that we're in the early stages of another major bull run.
Now, as I understand it, when you first put the company together, your team built a list of around 100 assets, both in public hands and private hands. So, how did you sift through all of that? Could you just kind of detail that process?
Oh, for sure. It's there's a group of people behind me that I rely on to do this type of technical work. I'm not a geologist or an engineer. I come from the financial industry, the banks in the 80s, but I know a lot of really good people that I've worked with for a long time. And we just went through the list of assets, and these assets in most cases are public, but there's some private ones as well. And the data is readily available, and it just takes time and energy. And we go through all the data, start ripping it apart, looking to see how valid it is, seeing if we believe the data, rebuilding our own models, and looking at the economics and other criteria. Jurisdiction is very important. Where the assets is located. I don't want to be buying assets in Venezuela, for example, or China for that matter. Eastern Canada is a great place. Parts of the United States are good spots as well. Some of Mexico is also really good. So we looked at political jurisdiction. We looked at holding costs. We looked at how many ounces they've actually defined in the ground, and your number of 100 is approximately right. And we broke that down into smaller groups, and eventually broke it down into our top 10 group. And it's quite interesting that I started meeting with these boards of directors in 2015 to try to convince them to merge with bigger entities so we could advance their projects. And these are management teams that had spent 10, 20 years developing these projects, and they just couldn't simply raise another penny. They had bills to pay. It costs money to operate a public company, or operate any company for that matter. And they're running up against the wall. So I was able to convince some of them to merge with us. And out of our top 10, we were actually successful in getting 6 of them. So 6 out of our top 10 was a pretty good feat as far as I'm concerned. And we ended up buying 8 companies over a space of 15 months. No one's ever done that before. And now today we're drilling and we're developing and de-risking and permitting and developing these assets, and eventually we expect to become a producing gold company.
Well, I know according to your company's presentation, your tier 1 assets are located in Canada. What happens, would you say, when these are not in safe jurisdictions? And speaking of jurisdictions, how friendly would you say is Ontario mining?
Ontario is very good. You've got Canada is a very large country, and many listeners here may have not even visited Canada, but Canada is an enormous country with a very small population. There's only about 38 million people that live in Canada, and most Canadians live across the U.S. border, and most of the rest of the country is unpopulated. except for some native Indians that are scattered around. And it's these native Indians that First Nations, we call them, that are absolutely impoverished. They're in desperate need of jobs, and these mines employ these First Nations. And so when we go in there as a mining company to try to develop northern Canada, where these assets are located, we normally get welcomed with open arms. Of course, we have to go through the environmental process because Canada is a very environmentally stringent jurisdiction. So there's a whole bunch of regulations we have to follow, and it takes time for permitting and so on and so forth. But when these mines open up, like a mine like Springpole, for example, which is our largest asset, it'll employ 500 people, and it'll, for a region probably greater than over a couple hundred miles surrounding that mill, it'll affect in a positive way economically for all the people that live in that area. So, and these mines last forever. That mine will be producing for 10 or 20 years, or possibly even longer than that. So, it creates real wealth and creates real change for these communities and educates children, and it just changes the lives of people. So, we're excited about doing it, and and Canada's a great place to be doing it.
Yeah, I think that's something, it's a noble cause. It's something that Canadians can really get behind. So moving forward, what would you say? Do you have any news release updates coming up, or any kind of milestones for foreseeably for 2018?
Well, Springpole is really our primary focus right now. There is drilling going on at Goldland, and that's going to continue, but the Springpole permitting is a real big focus of ours. We've actually built our team up now. Since we changed the focus of the business, we were basically a consolidator. We were acquiring assets and sitting on them, deciding on what we're going to do, whether we're going to partner them or whether we're going to develop them ourselves. And then when the market changed back in 2016 and 2017, we decided that it makes more sense that we're going to develop these assets ourselves. But that required us to put together a team of people. And that's why we changed the CEO out. We now have a new CEO. He's put together some other interesting individuals he's put in place who are experts in CSR and experts in permitting and engineers and so on. We're really changing the business to become a developer and ultimately becoming a producer. So there will be news coming on Springpole throughout the year, but also look for news on Goldland as we continue to drill. We hope to get some work done at Hope Brook as well, and Cameron also towards the end of the year.
In terms of Springpole, could you maybe explain how profitability would be affected if it goes into production for shareholders, and particularly if this became private, for example?
Well, it won't be going private unless someone wants to buy First Mining. But we're focused on getting that into a producing mine, and it's if it's not the largest, it's one of the top 2 or 3 largest gold projects in all of Canada, and it's likely in the top 5 gold projects in the entire world. It's a big asset, and the pre-feasibility study that we did, or the preliminary economic assessment we did, shows about 300,000 ounces of gold production over 11 or 12 year period, and that's with no blue sky. That's not assuming any other gold is discovered, which of course we believe there will be a lot of future discoveries, but we're just not focused on developing the asset bigger. We don't need to make it bigger. It's already big enough as it is. But it's going to take time to get there, and we got to get permitting done and then get construction done, and that's a bit of a process. It takes time.
Do you know roughly how much time potentially until you can estimate that Springpole would be in production?
Well, there's a lot of factors that primarily the permitting process is really the big question mark. In Ontario, they're pretty good. It's generally speaking approximately a 2-year process from the time you start to the time you actually get your approvals. So that's a guideline, but it can drag out a little bit longer than that, depending on community support and other things like that. We think there's 3 First Nations groups that are in this region. They all appear very supportive of the project. We actually have several of them working on the project. When we were drilling last year, we had about 50 people working there, all local individuals, which is obviously a big coup for the local environment because there's really no jobs anywhere other than mining. So it was good to actually supply them those short-term jobs. But once the permitting is completed, we're going to go in there and start construction. The size of this project will likely take a couple years to build as well. So mining is a bit of a slow process. So I would say it could be 4 to 5 years before we actually see production.
Well, this brings me to First Quantum Minerals. What would you say in terms of the shareholders' interest? Have they gained under your tenure in First Majestic?
Well, First Quantum and First Majestic are quite different companies. They're First Quantum I put together in 1992. I left that company in 2000. When I was there, I put together the management teams and the core African assets in the copper belt in Zambia and Congo. And then when I left, obviously First Quantum became a huge success and one of the largest copper companies in the world. And then in 2002, I put together First Majestic Silver, based on a very similar strategy, focusing on one region in the world. And First Mining Gold just, obviously is also focused on one region in the world. It's kind of my forte. But I focused First Majestic Silver on silver in Mexico. And, we're now the second largest silver producer in the country. We're producing about 17 million ounces of silver equivalent annually. We're just in the process of doing an acquisition, which will add our largest mine, actually. It'll take us up to somewhere close to 30 million silver equivalent ounces per year, which we're pretty excited about. That acquisition should close sometime in May, we're expecting. And I put together First Mining Gold in 2014, 2015. It came public in 2015 and built up its core asset base, with 25 assets now, 5 of which are really the tier 1 assets. And it's a pretty exciting portfolio. And it's just in the early stages. It takes time. And people may think, well, 5 years seems to be a long time, but it's actually not. 5 years goes pretty darn quick. First Majestic is in its 16th year of business, and I've been, I was the founder and CEO and director of that company since the beginning. And mining takes time, and as you de-risk these assets, that's when normally, anyways, in most cases, the share price starts to move every single time you meet a milestone. So right now we're a little, the stock has been under some pressure, since, the last 18 months due to the entire sector being out of favor. But, that'll change quickly once the metals markets get a little bit more buoyant and we start de-risking these assets.
Are you currently buying any shares right now on the open market?
I haven't in the last couple of weeks. I think about a month ago. The insider trading reports are available online. You can go see them, or people watching this can go see them. But I think it was about a month ago. I bought about 100,000 shares in the market over a space of a couple of days. And the CEO, Jeff Swinoga, who is the new CEO I mentioned earlier, he's actually dedicated to put his entire first-year salary into buying stock. So I'm with him in the market, side by side, buying stock. We haven't been in the market for the last couple of weeks, but we'll definitely be buying more.
Now, you mentioned not necessarily getting into gold and silver as a hedge against, wars in the Middle East in particular. But what would you say in terms of a potential looming dollar crash right within the United States? Is this a good way for Americans to protect themselves?
I buy my gold and silver every year. I've been doing it for a long, long time, and I'm all in when it comes to the mining sector. I own a little bit of real estate, but most of my net worth is in mining stocks. First Majestic, First Mining, and a variety of other stocks that are in my portfolio. So, and that hasn't changed for 35 years. I'm not recommending people out there put their portfolios as concentrated as mine. I think I know what I'm doing, and I wouldn't want to put anyone through the headaches of having almost 100% of their net worth in mining stocks. But, that's where I am, and it's high risk, but it's also high reward, and I try to focus my investments on a limited number of projects. I don't have 20 or 30 companies in my portfolio. I've got really just a handful of well-run, companies that have good assets, and I stay with them for a long, long time. And then, in my view, that's how you make the 5 and 10 baggers, by staying with these management teams, with these companies for extended periods of time. And, you make, 5 or 10 times your money, and you wait, 2, 3, 4, 5 years to do it. To me, that's worth it.
I've heard you say in the past, in terms of silver, a potential moving up to triple digits. So I'm curious, are you still currently feeling that bullish?
Well, I try to tone down my expectations a little bit, because I get called a quack sometimes, and people go, "Oh, that Neumeyer guy's talking his book," and so on and so forth, and which I don't really buy into. It's a number that I think is legitimately possible. It does sound high, particularly considering where we're trading today, but I just simply look at the ratio, and then you could tell you can call Jim Rickards a nut too by calling gold at $10,000, but he explains how he comes up with that number, and it makes sense, and at least it makes sense to me. And I come up with $140, $150 silver by simply dividing the mine ratio. Today we're mining 9 to 1, so for every 1 ounce of gold, we're mining 9 ounces of silver. So today gold's $13.50 divided by 9 is somewhere around $150. I don't have the calculator in front of me, but it's somewhere around that number. And I think that's where silver should be trading. Silver should be at its mining ratio, because that's what's actually coming out of the ground. I hope I see it while I'm still working for First Majestic.
Well, I can see, according to your company's presentation here, in terms of your peer comparison, you're around 71% below the average in terms of enterprise, with value divided by ounces in gold. So what do you think needs to change here for the market in order to come around to first mining gold?
It's coming around to all these juniors. I own a handful of these juniors, and they're all in similar situations. First Majestic is doing okay. Sorry for the sirens. I don't know if you can hear that, but I'm in New York right now. I'm in New York, and okay, there it goes. Anyways, First Majestic being a producer, the money goes to the producers first, and then so we're seeing the producers performing relatively well over the last 12 months. I'm not saying great, but it's okay, but the juniors who have no revenue, like a company like First Mining Gold, are underwater quite substantially. They've really been sold off by the investors, and there's just simply no institutional money coming into this marketplace. And until that changes, these stocks are going to languish a little bit, and people just have to be prepared for that exact inevitability, because Rick Rule says when you buy one of these speculative stocks, be prepared for it to be down 50% after you buy it, because hopefully it doesn't happen. But if it does, don't be too surprised, because often it does happen, because investors tend to be sometimes early. Retail investors, tend to be early, I should say. Institutions tend to be a little bit late. The institutionals come to the party, after the first 10 or 20% of the run, they'll come in. But normally retail guys will come in there early and sometimes get discouraged because, they buy a stock at, 50 cents, and next thing they know it's at 30 cents. But you have to ask yourself the question, in that particular case, when that happens to you, would I buy the stock today? And if fundamentals have changed and the stock has moved down for a fundamental reason, then you might have to decide to take the loss and get out of it. But if nothing's changed, or the company's even better than it was before, but the share price is down, then you have to consider either just holding on to it, or possibly even, if you can afford it, even average down and buy a little bit more. And then I think sometimes retail investors get a little bit scared. They see the stock cut in half, and they decide to sell it just because the share price is down. and that's often sometimes the worst thing you can do.
Yeah, well, based on this 71% ratio with your competitors there, you're looking at an upswing of around 350%. So I think it'd be wise for people to hold on tight at this point. So maybe you can let us know for people who might be interested in getting involved, where can they find you guys online?
Sure. Yeah, First Mining Gold is just simply firstmininggold.com. The website's there. There's the latest presentations there, which people should review in some detail. All the projects are there, and of course, if people have questions, they should phone the investor relations individual. His name is Derek Iwanaka in the Vancouver office, and he's always a wealth of information. And of course, with First Majestic Silver, Todd Anthony is the person to call there. The website's firstmajestic.com. And then myself on Twitter, Keith_Neumeyer, if people want to follow the stuff that I follow.
Okay, awesome. Thanks so much for that. We're going to be sure to have all the links located in the description below. Folks, check them out. Once again, Keith, thanks so much for joining us today.
Well, it's my pleasure. Thank you.